Today's featured money map, the S&P 500 for February 25th, 2013. In this money map, we see a market suddenly and quickly dropping out of its long and mid-term resistance as it returns to the safety of the crowd. In this case, that return went so far as to test support. The action shows the speed of the drop, while the direction of the big money points to crowds not yet ready to follow price down. Because of the location, no buy opportunities here, and after a drop of this size, only a weak sell opportunity. Unless the market unexpectedly continues a short-term drop, the random trader can look forward to future opportunities to buy or buy back into the long-term trend. Time to focus on the essentials, starting with read the market. For location, looking at the range sizes, we see the extent and suddenness of the drop. The trigger time frame covers most of the trade range, which also covers most of the term range. The term range, however, remains above the crowd, indicating continued support on the long term. For action, even with the size of the drop, the term is still in an upflow and has been for some time. The trade and trigger action show major changes from cycle to a strong downflow and a drop. These definitely mark action extremes. This also explains the small term range compared to the large trade and trigger ranges. For direction, the term's big money crowd has risen strongly for a long time and continues to do so. A lot of money will have to move down to turn this market around. Even with the big drops in range and action, the term and trigger crowd remain flat, definite indication of a crowd return. Speculate, buy, sell, or wait. While it is easy to read this market, it is difficult to find any good trade opportunities. No great buys because the standard trigger crowd entry remains overpriced on the term, and no great sells because of the extreme drop. So the random trader waits on this market and looks for better opportunities elsewhere. For the next essential, rule your risk, the money map shows no long trades. And while some of the short trade prospect ratios look enticing, they are very aggressive. Due to the size of the trigger range, the one moderate short opportunity was already accomplished. In this case, rule your risk by looking for better opportunities. For the final essential, take the money. If you were previously short, tighten your stop or exit. Extremes typically correct with extremes, but this extreme has not yet shown any sign of ending. Therefore, most random traders will not want to trade this market. Nevertheless, given the term and trigger close locations, an experienced hyper-aggressive random trader driven to catch the bottom of the long-term trend's continuation might consider a light buy on the crowd underpriced line around 1501, with a stop on the term underpriced line around 1490. The minimum target, the term premium line, with an eye to riding a long move up. That trade definitely fits the description of standing in front of a moving freight train, so consider it carefully. This is the Random Expert reminding you, focus on the essentials, and good luck.